Is working with a financial advisor a total waste of money? Time to think like an investor. Over the past few decades, the price that investors pay to work with a financial professional has really come to the fore because, like most industries where somebody makes money to sell something, it quickly becomes apparent. The question comes to mind, how much is this person making off me? Am I really benefiting from this relationship, or am I just padding the pockets of my financial advisor who sold me this big insurance policy or helped me with my investments for a year and now never talks to me again? And these are great questions to ask, because if you are paying for something, you should make sure that you are getting an equal or larger amount of value back for that. Now, companies like Vanguard or Robinhood or Betterment, different robo-advisors or do-it-yourself platforms have been very quick to point this out and actually use financial advisor fees as a way to kind of peddle their own agenda. And you know what? It's completely true. The math is totally outrageous. Let me show you something. I want to show you the difference between somebody who were to hypothetically pay no investment fees and somebody who pays a 1% investment fee. Let's say that you're a 35-year-old and you have $50,000 to invest. So that will be our current principal, our startup capital. Now, you can put away $500 a month to your investments every single month, which is equal to about $6,000 per year. And we're gonna say that we're 35 now, and we probably want to invest this money until we're 65, so we'll put it away for 30 years. And the average investment rate that we like to assume conservatively on a portfolio of like 100% stocks or a pretty aggressive portfolio might be 8%, okay? And when we calculate this, what we find is someone who's investing this much, like you, at age 65, would have $1.23 million, okay? That's quite a bit of money. Now, what happens if we take that 8% and assume that instead you're gonna go to a financial advisor and pay them a 1% fee to handle your investments and build a financial plan and do a holistic analysis of all of your different stuff, okay? What do we end up at? So let's change this 8 to a 7 and see how our investments shift. Well, instead of having 1.23 million, now we have $987,000. There's $100 and some thousand that just evaporated there to fees over the course of your life. So this is where a company like Robinhood or Betterment or Vanguard steps in and says, hey, why work with a financial advisor? They're robbing you of hundreds of thousands of dollars over the course of your life, maybe even a third or a quarter of your lifetime wealth. Now, in my view, if you want a good life and good peace of mind and you want to live a life that maximizes your potential, you have to be investing. You have to find a way to translate all that human capital or labor or work that you do into financial capital so that one day you don't have to work, right? And so the question for me isn't really should I invest or should I not? That's not the question. You have to be investing. The question is, how am I going to do it? Should I do it on my own and try to learn the ropes and do it all myself? Or should I hire someone to work with to help me with that? And I think that there are certain situations in which either answer are correct. This isn't a video of another financial advisor freaking out, getting all defensive because he's trying to defend his income stream. No, I want to lay out who is a financial advisor right for and who is it a total waste of money for. But before I get into any of that, I have to thank the sponsor of today's video, which is Railway Roasters. Now, as a financial advisor, I have to get up pretty early to, watch markets and read the headlines, and sometimes it's been a little late night the night before. I have to have coffee on hand, ready to go. I used to have a nasty Starbucks addiction that I've now kicked. Thanks to Railway Roasters, a fantastic coffee, many different varieties of your choosing. Make sure to hit that link below in the description. Go take a look at the options at Railway Roasters. It's become one of my favorite coffees. Go grab yourself a couple bags, take a look around. But again, thank you so much to Railway Roasters for sponsoring today's video. But back to what I was saying before, because we want to talk about who is an investment advisor right for and who is it a waste of money for, right? To do this, I need to point out a few flaws in the logic of, well, hey, a 1% fee is going to destroy a third of your wealth. And there's two really important things we have to understand if we want to make this an apples to apples objective debate, right? One of these things is that doing your investing on your own isn't free either. And of course, yes, it is cheaper, but it's not that much cheaper. Relatively speaking, if we're looking at having your assets managed in a financial plan and all these sorts of things, you're usually paying around 1% to a professional. And if you wanted to go to a robo-advisor or trade your own stocks, you're probably incurring about 50 basis points or half of 1% in fees to do that. So first things first, it's not as if we're measuring a 1% fee versus nothing. You're going to have to do it eventually. So it's going to be, for sake of our example, 1% versus 0.5%. And secondly, we need to understand the math of compounding, right? If you're paying a 1% fee and you're starting with $50,000 a year, the fee there is nothing. It's like $500 a year. But as you grow and grow and grow, almost all of the investment fees you might incur working with a professional accrue at the very end of your career. For instance, if you're investing for 30 years, 2/3 of all the fees you pay are going to come in the last 10 years. Because if you're paying fees as a percentage of the assets you have to invest, you're obviously going to be paying the most fees later in life. Now, here's the thing. Investment advisory and financial planning fees are typically tiered, which means that as you have larger and larger amounts of money, the percentage you pay is reduced. So for us, for me and my business, if someone comes to us with $50,000, it is for sure going to be 1%. But if you have $1 million, it might look more like 0.5%. So what these calculations don't really take into account is the fact that at the stage of your life where you will be paying the most in fees, your fees are not 1%, they're actually reduced. So what I want to do is look at an example of apples to apples. What if we compare 1% to 0.5%, doing it with a professional versus going DIY, and then also thinking about tiering the fees so that as we get older and have more money to invest, our fee declines. So I've built out a model that compares this for us, where we have fees decline by half once we hit $500,000, which is reasonable. And we also have a situation where we're not just paying nothing to DIY, we're gonna pay about half. We're gonna pay 50 basis points instead of 1%. And what we see here is that, unlike our other example, if we decide to invest with a professional, after all the fees and after accounting for this apples to apples comparison, we would end up here with $934,000 if we were to go with a professional. Now, what does it look like if we invest on our own and we take all these factors into account as well? Well, we end up with 1.071 or $1,071,000. So I can include a link to this if you guys want to play around with it and see how it works. But the reality of the situation here is that difference, in this case $137,000, is not 30% or 25% of your wealth. It's more like 15% of your wealth. So there are some shenanigans going on with the numbers that people use in these comparisons. Now, let's think of it this way, okay? Bear with me. If we take that $137,000 difference and we divide it by the 30 years that you were investing for. You see, you're not just buying a one-time product that's costing you 1/3 of your wealth. This is also most of your life you're investing for and accumulating fees over that period. But if we take that and divide it by 30 years, okay, and we think about how much time we might put into our own investments. Maybe we put in 2 hours a week, which is safe to assume. I mean, that's really generous. I heard a study that some Robinhood traders open their account 10 times per day. So that's a lot more, but we'll assume you're a more, prudent investor and you're only going to be checking this for 2 hours per week. Now, what this actually comes out to is about $44 an hour, okay? If you put 2 hours into your plan a week and, you're doing this for 30 years and there's 52 weeks in a year, we arrive at the conclusion that by not going with a financial planner, you would have spent about $44 per hour in your own time to make this work, to make this happen. You can manage things on your own. Now, what that ultimately means is that if you're making over $88,000 per year, that means that you should absolutely be paying for financial advice because your time is worth more than the effort and the time that you're putting into it on a wage basis, right? So you always have to think about it in terms of your time too. You can't compare, I'm gonna do my investments myself and manage it all myself, or I'm gonna outsource it to a professional. If you compare the costs, one of them, the work's being done for you. One of them, you have to sacrifice your labor and your free time to have it done. So that makes it a little bit more of an honest comparison as well. Never mind the idea that you actually might do a little bit better with a guide. I mean, personally, for me, there was this one time I was looking in the mirror, I'm like, this guy looks like a bag of milk, and I'm talking about myself. And I'm like, I need to go get help. And I decided, okay, I'm not good at this whole thing on my own. I'm gonna get a personal trainer who's gonna get me the meal plan. He's going to teach me all about the different exercises we need to do. He's gonna keep me accountable. He's gonna follow up. We're gonna have certain times we meet. And what happened is I actually ended up getting into the best shape of my life by far and away. And that's just because I decided to outsource the initiative and outsource the expertise to somebody who did it full time, right? So what's the whole point? I think that's exactly the point. If you're the kind of person who feels as if you are willing to spend the hours, take the time, dive in, create your own financial plan that takes into account all the variables, like different work retirement plans. You get taking into account your insurance, you're thinking about investment strategies, how to manage your tax picture. If you have the energy and you have the gumption to go in and do that yourself and to build yourself a financial plan, manage your own investments, it's a complete waste of money to hire a financial advisor. I'm going to be completely honest. You can get away with doing that on your own, but here's the big thing. I think that if that is you, you fall into 5 to maybe 10% of people who are willing to do that. It's such a small percentage of people who are willing to do that. And my view is that as we spread this narrative and this idea that nobody needs financial advice, that we should all use some cheap DIY solution, like we hear from the Robin Hoods and the Vanguards and all these different people, we might actually be doing a disservice to that subsect of society or the majority of society who actually really needs advice because they don't care. The largest group of people I serve in my business aren't people who don't want to invest or aren't smart enough or don't have the energy. It is purely people who think, you know what, I just think this is important, but I really don't care. And I think if we take that section of people, that demographic who really actually wants and needs financial advice, and we continue to perpetuate this myth that, oh, it's not worth the cost, we're probably doing a massive disservice to a majority of society so that we can prove a point for one small subsection of society, like engineers, who want to do everything on their own and save every dime they can because they understand it and they want to take action and build their own plan themselves. Ultimately, at the end of the day, your investments are probably more important than changing your car oil yourself or doing your own haircuts. I mean, both of those things you can remedy and they're not going to have a massive expense on your peace of mind or your overall wealth. Investing, on the other hand, your whole lifestyle and your future depends on it. Your peace of mind in the future absolutely depends on the actions you take today and if you're doing things correctly or incorrectly. So at the end of the day, absolutely, 5 to 10% of people who want to take all of the initiative and go ahead and do it, good for you. Don't pay the fees, you'll get away with it, you'll be just fine. But I think for the majority of people who believe that investing is important and that their future is something not to be messed around with, it's important for them to understand that the fees don't necessarily tell the whole picture, and it's very likely that you're going to get more value than what you pay if you're someone who doesn't want to do it in the first place. So anyways, thank you so much for watching this video. If you got any value out of it whatsoever, if I was able to produce some new ideas for you on the idea of investing fees and how important they are, please make sure to hit that like button below to support the channel, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.